how to get a free property. Yes, this is not a scam. There are ways to get a free property, and I'll show you exactly how to do this step by step in this week's episode of Prime Property TV. Promise you, it'll be worth it. Good day, Toronto. Welcome to another episode of Prime Property TV. So glad you joined me here. I'm going to be starting a series called Teach Me How To, because a lot of people have been asking me how I do a lot of certain things. I have no problem sharing my secrets on doing this, because you know what? The whole purpose of why I do this is to get the knowledge out there and to kind of debunk and demyth any kind of like real estate worries or scare that people may have when it comes to real estate investing. Because with real estate investing, you can make a huge difference financially to, you know, your life, your family's life, and whatnot, right? So yes, I know there'll be a lot of copycat people out there, but I'm just going to put it out there right now to show you exactly what me and some of my clients do. So I'm doing this personally. I'm showing my clients how to do this, and this is exactly how we're doing it. So in the first episode of this series of Teach Me How To, I'm going to teach you how to get a free property. Now, I'm going to preface, okay? This is not for everybody, right? Like, you obviously need a certain amount of requirements in terms of like mortgage qualifications and stuff like that, right? It's not like, oh, you can just roll up with no income, no qualifications, kind of like back in 2008 in US with like the Ninja loans, you know, no income, no job applications. It's not like that, right? There is a caveat to it, but the whole purpose of this, we're not borrowing private money like loan shark style to kind of get the down payment and then buying something else. It's totally not like that, and it is in the Southern Ontario, so it is within driving distance for most of my clients and the people that are probably watching this type of content, right? So without further ado, I am going to share my screen and shrink myself right now. All right, so I'm over here on the left-hand side. Again, what you're seeing right now is basically my investment calculator that I use with a lot of my clients. If anyone wants a copy of it, you can get a copy of it in the description below. I've shared this many, many times, just in case you think I'm hiding it from you. No, I'm not. It's all out there, right? So I'm going to use a property that one of my clients bought, like, well, actually, let me double check here. Right, yeah, like back in December, a few months ago, right? So this is right now in summertime. Call it end of summer, you know, September 2021. I'm going to show you how we got this property free. But keep in mind, this property, obviously the prices have gone up. And the reason why I'm using this property is because you'll see next week on this series of Teach Me How To, I'm going to show you how to grow a portfolio, and I'm going to use this exact same example. So you want to stay tuned for next week's episode to, you know, check that out. Leading you on right there. So let me show you the property right now. And I'm pretty sure I've talked about this property before, because, you know, my clients, Milton Meadow, have been nice enough to allow me to share this kind of property to kind of like allow people to understand how we're doing this, right? So this is a property in Oshawa in Eastdale. So we purposely like doing legal 2-unit properties, because if you ever manage the property, if something's not legal and something goes sideways and you have to go down on a tenant board, rent gets held back, poo-poo hits the fan, stuff goes haywire. Right, so we want to be legal, so we wanted to. So we bought this property for $745,000 at the time. It was multiple offers, and you can tell it was listed for $639, but we went up there. So let me just plug in all the numbers for you right now. 1 second, I'm just going to pause this video so you're not watching me type numbers. Voila! Through the magic of video editing, all the numbers are separated here. So I'm just going to show you some quick photos of this property. Like, it's 3 bedrooms upstairs. It's a standard bungalow. The main entrance is to the side. We like the property because there's a carport over here, right? And then here's the upstairs. We renovated it a little bit to kind of push the rents. And then downstairs is 2 bedrooms and 1 washroom, which is quite standard. The reason why this property was really, really good was because it's a back split. So like each floor, main and level, technically had 2 levels. We had to do a little bit of work in the kitchen down here to brighten the place up and get it rentable. But we had no issues renting this. I don't remember. I feel like we didn't have much of a vacancy time between closing and actually getting it, right? So, you know, standard stuff, 2 bedrooms, here's another bedroom. Standard stuff, right? And there's a backyard here. Now, what I'm going to show you here is we bought this for $750. You got the taxes at $4,000, and we're going to do a 20% down, which is standard 30-year mortgage at 2%. Now, I know you can probably get less, but again, I always just do 2% because on the off chance you're going to need to go somewhere else, I'd rather be conservative with kind of my numbers than kind of be like trying to squeeze in all the cash flow possible, right? Property insurance is probably a little bit less. We have contacts I'll get you for less, but I just put $100 a month, and then you can always put in your maintenance, snow removal, all that stuff you want to, but like the tenants are taking care of the landscaping and snow removal. We don't have property management, and whatever you feel comfortable with yourself with the maintenance fee, you can do it yourself, right? And we put in $30 for hot water tank. So we filled it up for upstairs for $2,300. Even though it's terminated, we actually got something off market, and had to save our clients some commission. And then on the lower level, we initially had it rented out for $17, but then something happened, and then we had to rent it out for upstairs for $18.50 because the market was that strong. So we got actually more rent. So in this example, right, I'm just going to put the rent back at $17 because that's kind of what we had it at. So how you're going to get this property for free is you understand that when you're buying something, you put 20% down, and a lot of people have this money saved, but actually 90% of the time, most of my clients who buy this, they're actually borrowing money from their own house, their existing house, to fund this, right? So you have the 80% portion of the mortgage for this property right now, and then the 20%, the down payment, actually comes from your existing house. So if you actually do the math, 80% plus 20% is 100%, right? So that means 100% of this property is being paid for by the bank. You're using zero money of your own. Just let me repeat that for you. 80% of the mortgage for the property is funded by a bank, and the other 20 is also funded by probably the same bank or another bank via a refinance, and that means all in total, you're paying $0 for this property. And here's going to be a kicker on why this is a free property. And this is why I think it's not everyone can do it, because obviously you have to own your primary residence and have some equity and a good job for the refinance and qualification to make this happen. But if you can do it, and a lot of people in Toronto can, because if you own real estate for more than 5 years, you're sitting on hundreds of thousands of dollars of equity, you can do this strategy. And this is why if you want to work with us, again, I'll put my link right here, www.chavzan.com. We'll show you how to do it with your property and plug your numbers into the spreadsheet and show you the analysis, right? So in my client's case, right, they are going to borrow that money. But before we get there, let me just show you how the rough numbers work, right? I think I put a video about calculating cash flows, like up here if you want to check it out. But when we're calculating cash flow, after all the expenses, you take your total rents, which were 23 and 17, so 4,000. You subtract your expenses and you subtract your mortgage, which is exactly what we have down here, right? You can follow my calculations. So that means at the end of the day, there's $1,300 of cash flow. That means you can, I don't know, that's like rent for like half a condo at that point, right? So it's a lot of money because we're knowing where to get it. Now, obviously, if you're looking at this number, hey, Zen, I can't buy that right now. Yes, it's true, you can't do that. I mean, some pockets you can, right? But again, talk to us about it if you want to learn how. But this is, again, for illustrative purposes. So if you were to now calculate how much it costs to borrow from yourself, so this is the magic. I'm gonna take the amount that you borrow, which down here is $162,000. The down payment is 20% of the purchase price, which is $150, right? You can see. Then you put a legal fees, call it $1,500, and land transfer tax. So when you make the amount of money you borrow from your house equal to whatever it is over here, you can see that we're now adding $602.39 to your existing mortgage, right? So what that means is now your primary home is going to increase in the mortgage because you borrowed that money out to buy this investment property. However, despite you borrowing that $162,000 and increasing your mortgage amount by $600, you are still cash flow positive, which means that this property is free. Plus, on top of that, you're getting $700 a month in cash flow that you can spend on gas, groceries, a nice dinner. And then on top of that, your tenant is paying down $14,000 of your mortgage every single year. So you're getting $14,000 increase in your net worth. So you're guaranteed right now, in this example, $30,000 return on the money that you're investing, which is coming from your own property and it's free. So technically the return on investment is infinite, but for the purpose of this, let's just say you had the $162,000, which means you're getting an 18% return on your money just by cash flow and mortgage pay down alone without appreciation. And I've been saying, don't want to expect the prices we've been getting, appreciation we've been getting last year, but in the last 42 years, the average appreciation in GTA is 6%. So I put 6% here. I can do 3 if you want, whatever. I don't care. I don't bank on appreciation, right? But for illustrative purposes, 6% is $45,000 increase. And you're going to see in the next video, it's actually a little bit more than that. But for the purpose of this video, 6%. That means all in, the amount of money you're making in cash flow, mortgage pay down, and appreciation, because you get paid 3 ways in real estate investing, is $75,000 or 46% return on your investment, which if you borrow from your house is free and infinite. This is how we have and buy free properties for our clients for a very, very long time. Then you have to also keep in mind, right? You can probably get a lower interest rate on your primary home, like 1.5% right now. Yes, mortgage are dirt cheap right now. And you can reduce the mortgage insurance property. You can also reduce your property insurance, right? Which will make your cash flow higher. Or you can just kind of get lucky in what we did. The rent went up, the tenants moved out, we got $1,850. So this property have 0 of their own capital in it. It's spitting out $900 a month in cash flow. And you're getting mortgage paid down and appreciation. This is how you get property for free and how you win at real estate investing. That's how you do it. So yes, the secret's out there, but if you want to know where we're buying these properties that can have numbers like this, you can reach out to me. It's www.chavzad.com. The link will be somewhere on the screen right here. And until next time, hopefully this gives you an idea of how to get a free property and how we've been investing for the last like almost decade. And in next week's video, make sure you stay tuned to that. I'm going to show you how to grow your portfolio, taking this exact same property and multiplying it, right? Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.